In this video, I'm going to break down the exact trading strategy that I've used to make over $1,000 every single day. And the best part about it is that it's insanely simple and only takes around 5 minutes to set up. Let's go. This strategy is called the order block strategy. It's insanely simple and it makes a ton of money for me every single day. Now, using this strategy, what we're going to do is we're going to take advantage of the orders that people are putting in, but not able to get filled. And so what that means is when we have a massive move that comes up to an area and then we just see a huge reaction off of it, odds are there's going to be somebody who tried to enter right here, but could not get their order filled. Now, you've most likely been through a scenario like this before where let's say you're on Webull or Robinhood or whatever brokerage you're using, you try to enter an order, but then it ends up saying pending instead of actually filled. And so you're sitting there with your $3,000 or $4,000 and you're not actually able to fill on this position, which means that when we come back up, we're most likely going to then fill at this price that you tried to get in. Now, here's the deal with that. We are trading against banks, institutions, and people that have lots of money. And so what we want to do is we want to actually use these people's money against them, because a lot of these people who aren't getting filled are not getting filled for $30 million, let's say, right? That is an insane amount of money. So what is most likely to happen is when we come all the way back up to this order block area and this person's $30 million order fills, well, that is going to cause a massive reaction off the order block. And so what we're going to do is we're just going to ride this wave down and catch all of the profit that comes along with this order. So our job using this strategy is to find the people who have the largest amount of money, and we want to just hop in where they hop in, right? We know that their orders are most likely going to fill up in this area because there's a block of pending orders inside this gap here. And so we're just going to hop in with them and catch absolute massive moves, making you $1,000 plus every single day. So now that you have a good understanding of what the order block actually is, we need to know how to draw them, right? How do you actually draw an order block from start to finish? That way you know exactly what's going on, okay? First things first, we're going to switch over to the 1 hour time frame. This is the easiest time frame to find order blocks and is typically going to be the most powerful. So what we are looking for here is going to be a huge move that ends up changing character. If you don't know what a change of character is, essentially when we have a trend, let's say a downtrend, for example here, and we end up breaking that downtrend to shift the character to the other side. So we have this downtrend here, right? We know that this is lower highs, lower lows, lower lows, lower highs. When we break that previous lower high area, that means that we are most likely looking to start flipping to the upside, creating new higher highs, right? This area we determine is a change of character because we are shifting or changing from the bearish direction to the bullish direction. So what we're looking for is a move that does that, right? As you can see here, we end up having a bearish change of character. And so when we come up on this green move here that pushes all the way up and ends up breaking this structure, well, then now we have ourselves an area that we can identify as an order block. Because what's going to happen is someone is going to try to enter at the bottom of this move and they are going to fail to enter it, right? Somewhere down in this area, we're going to have somebody with $2, $3, $4 million in calls or in longs, and they're not going to get their order filled. So what we need to do is we need to figure out where that exact spot is. Now, let's zoom in here. What we want to find is the last candle before that massive move to the upside that is in the opposite direction. And so what that means is, well, we have this massive bullish move here. We're looking for the last bearish candle. That candle is going to be this right here, right? You can see this is the last bearish candle we have. By the way, my color of my charts are completely different from yours most likely, but this is red, this is green, right? So this is the last candle before that massive move. Now, what we are looking to do, since this is a bullish order block, we are looking to use the top of that candle body to the bottom of the candle wick. We want to include the buyers that are pushing this stock up. So this part is going to be included. What you're going to do is you're going to extend this all the way out. And as you can see, once we come back down to that order block, there's most likely going to be a type of reaction there. But we're going to talk about that in a little bit. Don't worry. Now, when we are looking for a bearish order block, as you can see right up here, we have the same kind of thing happening where we end up changing character to the downside. So when we originally ended up having a bullish move, we then ended up sweeping that bullish move and going all the way bearish. So as you can see, this massive move here has a lot of candles behind it. What we're going to do is on this, we're going to find the last green candle, which is this one right here. And on this candle, we're not going to include the buyers because we're only looking for sellers since this is a selling order block. So we're going to use the bottom of the candle body. If I can see it on this because it's so tiny, we're going to use the bottom of the candle body and we're going to include the sellers here, right? We're going to include the sellers here. This includes all the people who ended up pushing the stock down, right? All the people here who ended up selling are going to be included in this order block. So we're going to draw this all the way out and you've got yourselves 2 order blocks right here. Now, price is definitely going to start making moves at these order blocks and we need to be able to determine what's going to happen, right? So what's most likely going to happen is there's going to be 2 things that happen when you get to an order block. Either you are going to reject straight off or you're going to break, retest, and continue to the other side, right? Now, why would we continue to the other side? Well, let's say, for example, here that we have $2 million in liquidity. If this $2 million order is pending here and we end up touching this order block, we're probably going to push straight up off of this. Now, let's say that this $2 million order block has actually been knocked down over time. We've retested it over and over again. Every single time that you touch this order block, you are taking away liquidity from this move. So what originally was a $2 million position or a $2 million pending order, we touched it the first time, that took out some liquidity, right? So this now became a $1 million pending order, let's say. We touched it again. This then filled more orders. So then now this is instead going to be a $500,000 order block. And so the more times we touch this order block, the more likely we are to continue to erase the amount of liquidity that is left inside of this order block. So if the liquidity inside this order block has already been drawn out, well, what's most likely going to happen is we're going to break the order block, retest it to see if this is still valid, and then we're going to fail and continue down, right? Now, there are some times where we do break it and then we retest it just to see it come all the way through, all the way up to the upside again. And that's the reason why I say we always wait for that retest there. These are the 2 outcomes that I want to pay attention to when we get to an order block. We're either going to see that massive move off or we're going to see a break, a retest of that order block, and a continuation to the downside. You know how to draw these order blocks, but how do you actually know where the price is most likely going to go when you get to that order block, right? How do we know that this is going to come all the way up here and then reverse straight off? Or how do we know that this is going to come all the way up here, break it, retest, and continue? This is just like in my other videos where I tell you that this is all about price action. You need to understand how the candles actually move and understand what's happening behind the candles that tell you exactly where the price is most likely going to go. And so the way that we do that is by paying attention to 2 things, okay? We pay attention to the pressure and we pay attention to the momentum of your candles. Now, when we look at a candle, we see this right here and we see this right here, a wick and a body. And the wick is going to tell you how much pressure you have on your candle, whereas the body is going to tell you how much momentum you have on that candle. So this is pressure, this is momentum. When we have a large wick, this means that we most likely have a lot of pressure on that stock. And why would that be the case? Well, think of it this way, right? The more and the longer that this selling wick is, the more sellers have participated to bring the price down. So as you can see here, yes, this most likely is a bullish candle still, but as you can see, there's a lot of pressure from sellers just bringing it down, bringing it down, bringing it down. So those sellers stepped in. It's like a war, right? You have to think about it like a war. Buyers are against sellers, and so they are competing to see who wins on every single candle. So on this candle here, you can see that we end up competing and the sellers end up aggressively winning, right? So this means that the sellers have the pressure here. We then need to see where the momentum is going. Do we have a lot of bullish momentum or do we have a lot of bearish momentum? That all depends on the size of this body right here. So if this body ended up flipping to the downside and became a massive candle like this, well, we then know that, hey, there's most likely a chance that this is going to be a massive move to the downside because we have a ton of bearish momentum. So if this is our order block right here, we want to take a position when we come back up to that order block. We then need to figure out what exactly is happening when we get there. And so to do that, we need to know the two things. We need to know where is the momentum and where is the pressure. So as we come up here, we retest this order block again. And as you can see, we have a gigantic selling wick along with a tiny little bit of buying pressure, right? And what that means is that sellers are most likely winning in this area. They're pushing the stock down, and so that's causing sellers to win in this occasion. Now, on this next candle, we see an absolutely massive candle with a ton of momentum. This is where I would most likely enter a position to the downside because I know that the momentum is there. We're breaking out of that order block to the other side with a huge downside candle that confirms, hey, we've got this move going in our direction. When you do enter a position on an order block, regardless if it's whether it's short or long, you want to make sure that you are targeting the next level down, because where we're most likely going to go is the next level of liquidity, right? We know that there's orders left down here because someone most likely did not get a position filled at this point. So where are we most likely going to go? Well, banks and institutions, they literally target these areas on purpose. So they will quite literally draw this position and make it go all the way down to this order block. And then we will make a decision of where we go from here. So at this point, I'm looking to exit a good amount of my position here and hold maybe a tiny little bit and see what's going to happen from that point on. When entering a position with an order block, it doesn't matter whether or not it's bullish or bearish. Your stop loss always is going to be on the other side of the order block that you entered. So let's say that we got ourselves a nice reaction with nice bullish pressure at the order block. Well, we're going to enter. Stop loss will go on the other side of the order block. And the target, like I said, is the next level of liquidity. So we'll just target the exact opposite side, right? It all comes down to just targeting the exact opposite level of liquidity, and that's most likely where we're going to go. Now, that's the overall concept of order blocks and how to enter these positions, but there's a few things that you can do to make these order blocks even stronger, okay? So the first thing that you can do is you can drop your time frame to the 15-minute. On the 15-minute, you can get a lot more precise of an order block. But be careful, because the lower time frame you go, let's say you go to the 2-minute, for example, yes, you'll get an even more precise order block, but the accuracy will start to go down, right? And so the best time frame that I recommend is going to be the 15. That's the lowest that I go when drawing these order blocks. And so what you can do is you can quite literally take this order block and go, okay, where was the last candle that is bearish right before this massive move to the upside? Well, it's not this giant block anymore. We actually have this area right here. And so remember, bullish order block, we include the buyers. So as you can see, we include the buyers right here. And now we've got ourselves a much more smooth and smaller order block that we can use as a target, which we did right here. So this 15-minute order block can get a lot more convenient for you because you can start to find a much more precise area. So for example, let me get rid of these things right here. We can condense it on the 15-minute just like this and have ourselves a tiny order block. So that tiny order block will give us a lot more precision, and we know exactly where we're most likely going to go if we end up taking a long at this order block, right? We most likely know that we're going to go straight back up to this next level of liquidity. Now, to make sure that an order block is the strongest that it absolutely can be, one of the most important things that we want to see are present is going to be a fair value gap. Now, a fair value gap, essentially, just to put it in really simple terms for you guys, is going to be a gap in between a massive move that shows that we don't have a price correction yet. So typically what's going to happen is price is always going to mitigate itself. Whenever we have a massive move like this, we're most likely going to have a move that comes up to an equilibrium point. That way it can kind of make sure that the balance of all things is good, right? Sometimes you're not going to get that though. And so sometimes what's going to happen is we're going to leave behind a gap like this. We're going to leave behind a gap like that, where we don't actually have the price of these wicks coming up and meeting each other. Okay, so lots of times you're going to see that the price is going to do something like this. That shows, okay, we have mitigated price. So we don't have any massive swings that are most likely going to occur, or we don't have anywhere to really target to the upside. But if we don't have that and we end up having this fair value gap present on this move, we have all the more reason for the stock to actually come up and retest this next order block, right? So I usually use those fair value gaps to kind of make sure that we know like, hey, this is a little bit stronger and it's most likely going to be respected even heavier than a normal order block would be. So a really good example of an order block that we would use is something like Apple here. As you can see, we have this massive move that comes down and changes character, creating ourselves a new downtrend, right? Now, what we need to find is going to be the candle that is right before that massive move that is in the opposite direction. As you can see, that is this candle right here. This white, aka green candle right here is going to be the candle that is last before that massive move. And so we want to use the sellers included here because we know that this is a bearish order block. So we include the sellers. So what's most likely going to happen is whenever we end up coming up to that next order block, we're most likely going to make a reaction at it. That gives you the opportunity to enter when you see that we have a lot of pressure in one direction. So you see we have a lot of pressure here. You can use that opportunity to enter here. Stop loss goes on the other side of the order block. And of course, we're going to target the next level of liquidity down. And because we have this massive gap here, I would actually use the Fibonacci levels to find out what my target is. So as you can see here, we end up putting our Fibonacci levels on the chart. And we go straight down to that 51.8 golden pocket area. If you don't know anything about the golden pocket strategy, don't worry. There's going to be a video at the end of this video is going to pop up. So that way you can watch that too. That strategy combined with this one is ridiculous. This is an absolutely green trade, amazing trade from start to finish. And all you had to do is really just figure out where the pressure and where the momentum is going on the stock after you touch the order block. Very simple. So as you guys can see, we have this massive move on Tesla here that starts to create that new upside trend, right? So we have this big move. It kind of invalidates all these older areas where we were creating these new lower lows. We have a failure to continue higher. So we're starting to see a really, really big move that might continue to the upside. What we want to do is, again, find the candle before that massive move. So as you can see, it's most likely right here. We're going to include the buyers that are pushing the stock up. And we're going to drag this order block all the way out. Now, what is most likely going to happen is we're going to test this order block again. And when we do test it again, we just need to see what reaction we're getting off the order block. And when we retest this order block again, as you can see, we come down, we retest this order block again. My goal is to see two things. Where's the pressure? Where's the momentum? One, we see that we have pretty decent pressure here to the upside, pushing up, but we end up having a pretty big move to the downside. Now, we haven't really exhausted this order block yet, so there's still a chance that we push to the upside. On this next candle here, though, you can see that we come all the way up, and look what ends up happening. That right there is a ton of bullish momentum, right? So once we come up and we start to really show that we're looking to break to the upside, shout out if you watched my EMA video, this literally shows exactly how this EMA is used as well. You can get your entry and target the next level of liquidity up, which in this case, we would have to go find the next order block and figure out where that next level of liquidity is. Every single time you use this strategy, it's insanely powerful and is most likely going to go your way. So we can do the same thing here. We see massive move to the downside, find out where the sellers are, boom, boom, boom. Tesla sellers are right here. We then extend all the way out, extend all the way out. And look what happens right here. As soon as we touch it, we have a massive amount of pressure. You guessed it, right? Pressure. A ton of pressure here shows that we're most likely going to continue to the downside. Now all we need to see is momentum backing it. And here you start to see momentum gaining. This is where I'd most likely enter to the other side. My stop loss is going to be above those previous candles highs because we already are on the other side of the order block. And you can most likely target this liquidity all the way down here, which is the next order block down. And if we play this all the way out, of course, as you can see, we go straight to that order block. And then what happens right after that, right? We bounce straight back off. So as you can see, we bounce straight back off. So as you can see, we make this massive move down to the order block. We continue to the upside, stop us out at break even. This strategy, guys, is insanely powerful. If you use it correctly with the right rules, you can absolutely change your life in literally no time. Let's say that this video was just way too confusing for you and you need more direction, a little bit more one-on-one personal help. This is exactly what I've done with over 400 students. I've personally put the SOA system, which is my trading strategy, and my entire system and rule set into other people's lives and quite literally change their lives, just like all these results that you're seeing on my screen right here. And so if you want to go a little bit more in depth, You want to see everything from start to finish and really get the most in-depth understanding of a trading strategy, how to build it, how to successfully scale from $0 to $10,000 a month. Well, then of course, the best thing to do is apply to join Simply Options Academy. It's the first link down in the description. You will work directly with me one-on-one and I will break down everything for you. I've scaled so many traders. It will help you. I guarantee it. And of course, like I promised, that Fibonacci video is right here popping up on the screen somewhere. So if you want to watch the Fibonacci video, it takes literally the entire strategy that I showed you and then combines it with Fibonacci, which is just an absolutely amazing thing. Video's on the screen. Watch it. See you later. Bye.